Nothing said on Empire is a recommendation to buy or sell any investments or products.
Still don't have a mic. I still don't have a mic. But guys, it's tough times, you know. Memory's
So your
down,
interior
crypto's
designer
down.
was like, try this other room with also bad acoustics.
I'm testing out the acoustics, Rob. The reality is, I have my Bloomberg screen right here, right now. So I'm just seeing the bloodbath in memory, bloodbath in crypto. A lot to talk about, gents. How are we doing?
Welcome to the roundup. What's up, folks?
Welcome to the roundup.
Welcome to the roundup. What did I miss last week? How was last week?
It was good. I think Santi is a mini Leopold, and so we had a good conversation last week about situational awareness and Santi trying to figure out what happens in his portfolio.
Rob, did you not hear from your finance department? I got margin called, and I used the funds that you provided for inversion to bail myself out. I'll make it all back. I promise you, I'll make it all back. Just one more time, and just give me a breather.
Immediately put 400 million into a private company after that too.
So, dude, guys, yeah.
You know, I need to be less liquid. Definitely need to be less
liquid for sure.
No, the discussion was, we thought we were degenerates in crypto, and then we discovered TradFi and Korea. But the moral of the story is, crypto has prepared us for this singular moment in finance. It is like, if you've been in crypto, like you are. This
is our time.
SpaceX unlocked. Jordy, I think Jordy and some of the guys that are good traders will like. Ansem too. We're looking at SpaceX and the unlocks that I think happened today or tomorrow, and they're like, guys, like, this is low float, high FTD.
This is it.
We were made for this singular moment in time. I love it.
You know, I always thought crypto would become more like finance. I wasn't expecting finance to become more like crypto, and it seems like that's happening. So,
what's going on your side, Jason?
I am. Life is good. I'm just busy. I mean, we're very busy integrating Masari, right? So the thing that they don't tell you is there's a lot of work that goes into an acquisition post deal. I mean, actually, they do tell you, and
people do tell you that.
People do tell you. Actually, a lot of people warned us, but it's good. I mean, I will say, thank God for Claude. Like, there's an enormous amount. Like, we just integrated our CRMs, right? So they were using Masari was on Salesforce. We're on HubSpot, and so you have to integrate tens of thousands of records. And, we sell to this company and they sell to this company. They renew, they renew with us in September. They renew with Masari in May. So you got to, consolidate that. So there used to be these integration teams with like 50 people. And now, thankfully we can do it with a couple of people in AI. But there's just a lot of work that goes into integrating. So I'm spending time on that. I will say our crypto native business is slow, and our enterprise and fintech and exchange and brokerage business is it's the fastest it's ever grown. So spending a lot more time, in the rooms that Rob likes to participate in, throwing on the suit, talking to the fintechs, baby.
Listen, I look good in a suit, so you can't blame me.
Oh, we can always count on Rob. I feel like I'm forced to say, because he's a board member. Rob, yes. Next inversion board meeting coming up, I would expect you to wear a suit, please.
So what's this board? Is it literally just you two?
It's just a good reason for Rob and I to just sit down and forcefully just sit down.
We haven't yet done one in person yet. Like, when are we going to do it in Monaco?
I was going to say,
when Santi invites us back.
Fellas, we're going to be back in New York in September, so we should do in person, and should we get?
What are you coming to New York for?
Just to see the team. There's a couple deals out there, and I'm just going to go out there.
Nice.
First and second week of September, I think I'll be there.
Nice. So, Rob? What are you guys looking at on the venture side? You guys just did this AI spend thing, which actually I want an intro, because that's it's like a problem internally. Is I need to figure out how much we're spending and what we're spending on. So that was I like that deal that you guys did. It was a non-crypto deal, which I think it was a non-crypto deal.
So what I would say about this is, part of the infrastructure. So they have like 3 products. So they have this thing they call Agent Studio, which allows you to kind of build your own agents from in whatever way that you want. You want to build an agent to do XYZ thing, and like, how do you build it? What capabilities does it need? What APIs does it need to plug into, etc. It also has basically like runtime infrastructure for agents that already exist for you today, but that's inclusive of things like payments, and they use X402 for part of their payment stack. in stablecoins. So Anthropic's an investor, and Excel's an investor, and Gradient's an investor, and a bunch of others, but also us and Coinbase, and a few other on that side as well. And so it is sort of the story around crypto and AI coming together in certain parts of agentic infrastructure. And then to the thing you talked about, they actually they spun out their router business because they found in their first few they were basically originally just using it internally for their clients who are also using the other products. But what they found was that for their first few clients, they were reducing token spend by about 80%. And so they're like, oh, well, it's working really well. There's obviously a lot of demand for this product. People are spending way too much on tokens, and the token maxing era needs to die. And so now they kind of launched that product, or came out of stealth with that product yesterday as well. So I'm happy to connect you as a client.
So does this mean
a little good deed as an investor?
Yeah, Rob's best BD guy for his portcos. Are you guys going to start doing more non-direct crypto deals?
I mean, the reality is like, if you look at the portfolio, I think a lot about what are we good at, and also where am I not going to get adversely selected against. And I think you're seeing a lot of the crypto venture funds go kind of really far out of their mandate to, things that are hardware related, mechanical engineering related, nuclear, robotics, et cetera, right? And a lot of these investors are very smart, but they don't have experience in these areas, and there's no real reason for the companies to take their money, because like they're not, money is green, obviously, but if you have other options for money, like you'd rather take money green from somebody who's like deep in your area, typically. And so what we've thought about is, okay, well, where are the areas that are touch crypto, but also, and are enabled by crypto, but also, maybe have these big addressable markets. And so, a lot of our companies, the fintech companies, like Arraign, for instance, has they announced their thing with Western Union, that it is a payments company and a fintech company, but uses stablecoin rails. The prediction markets on the poly market side, again, they have the infrastructure on chain, but much bigger addressable market. And Sapium is another one of those. Venice, also another one, which we had done previously, which is decentralized and private inference. And so again, like these things are they're crypto, and they're enabled by crypto. They are applications that sit on top of blockchains, but they're not, I wouldn't say, completely non-crypto, and they're in kind of the strike zone of the things that we think we're good at, and tertiary to areas that we've invested in before.
Nice. Santi, what about you? What are you looking at these days?
Oh, we're looking at well, I mean, obviously spending more of my time talking to traditional businesses and really liberating, just talk more holistically, thinking about like what releases the most amount of value in businesses. A lot of what I've been thinking about, not just tighter inversion, but just generally in my conversations, even at like the Selene Summit, and I think I mentioned it's like Rob mentioned something that is a key word, operative word. There's like mandate, and I think of now the world more simplistically, which is like you want to go where it's the best risk adjusted return and absolute return. And I think there's an element to what Rob is saying, which is, do you have a right to win? Do you have an edge in a particular sector? But and I feel like when you think about it, like technology is such a catch-all phrase. It's like innovation is happening everywhere. And so I feel like I do think it's like two things can be simultaneously true. A firm can reinvent itself to branch into other sectors and be very successful. What drives success in venture, in my estimation, has always been, do you have a good network, and can you build a reputation of being like a very good investor? But like technology is like has touched every sector in business. So yes, your mandate is to invest in innovation and technology. Some firms have it more loosely. I think of your Sequoia, you're just investing in the best founders that are going to like do breakthroughs. Now they don't do like biotech as much, but they're doing nuclear, and they're doing now more. Everyone's now doing more hardware, whereas like hardware like 5 years ago was like taboo. It's like, you don't do hardware. It's super capital intensive. You leave that to other people. But I will say a question, maybe more for Rob, is like, how do you think about mandate, and just going back to people and saying, guys, like, I feel like if you've been investing in crypto, it's been hard mode. And if you're principled, if you have a good team, like think about crypto as you've had to be multidisciplinary to like win in crypto. You have to have a deep understanding of like cryptography and be at the cutting edge of that, which requires its own. You have to be really good on just security, risk management, like you have liquid tokens, you have to manage a position. Yes, your venture. You've also had to be like talking about like financial infrastructure, right? DeFi. You've had to talk about other types of infrastructure, applications, consumer, like. And if you're like a crypto investing firm, you're competing for dollars against other firms. And like if you're an LP evaluating a particular investor in crypto, you would have had to ask these questions anyways. So like I feel like crypto for a really long time has been a very big industry attacking many different verticals. So I don't know, Rob, do you feel like you get pushback around like you're a crypto firm? It's like I know you keep saying like fintech and crypto. I just would say go as far as saying it's just investing in technology. And crypto has just allowed you to cut your teeth, and it's been on hard mode. The bigger question is, can you build a network so that you're the first call?
Yeah. So I think there's also a question around like, are you in a very early stage, like pre-seed seed fund versus like, later stage maturing business? I don't actually think, to your point, being multidisciplinary in crypto was really important, especially since 21. So pre 21, it really, I don't think was that important because like it was more about just like the trend in the wave of the entire industry. Post 21, to your point, do I understand the infrastructure, cryptography, what will work and what won't? Do I understand how networks scale? Do I understand capital markets infrastructure? Do I understand all of these different things? And I think if we were to open source all of the returns of all of the funds in the space, I think what we would find is that the people who have the best returns are those who built their firms to be multidisciplinary and had people who were deep in different subjects versus trying have individuals be generalist across all of those different areas. Because the reality is I don't actually think you can be best in the world and be also deep in cryptography and also deep in capital markets and also deep in some of the other things. And that's my general perspective. Now, to your point around generalist investors doing really well, I mean, I'll let you jump in. I think there are people who, like we talk about Sequoia being an incredible generalist investor. I think they're the best firm in the world as actual investors. I think they're the best firm in the world. But there is a partner there who is doing the hardware. There's not a partner there. There is somebody that's there who's doing something else, right? And so I think that's how you have to build a firm. The crypto firms, other than two, which are Andreessen and maybe Paradigm, are all too small and too and they just don't have the capabilities to go like extremely generalist. So when we've talked about like, oh, do we want to be more generalist? The conversation has also been, okay, well, here are the things we are good at as partnership. Well, do we need to hire somebody else? Right? Those are the things. And now, yes, people can reinvent themselves, but they can't reinvent themselves over 6 or 9 or 12 months. It takes time and work. And over a period of years, you can do that, but it takes time. Right. And so I think that's the way that we think about the world. And I think what you're seeing right now is like, if I see a robotics company where most of their big investors recently are crypto investors, like that doesn't tell me that's a bad signal and maybe it's just that crypto people are more first principles and they're early into this thing. But it also could signal that people who actually understand mechanical engineering deeply are not people who want to invest in this thing.
Yeah. Oh, there's a lot to unpack there. On the last point, I've thought more deeply now about like generalists versus experts. And like sometimes experts know too much to their detriment and like they won't do a deal. Like just go, and they're in academia, right? But like I think it was Benchmark or Sequoia or Andreessen. All three of them have had like a hardware guy, to your point, or like a cybersecurity guy that worked at Palo Alto Networks or worked at like Intel in the early days and like just has the network and knows all the founders and stuff. But yeah, I like generally on like how to build the best investment firm, like how much of Sequoia is like the just the brand that they built for the signaling, whereas like I guess like the argument around like I guess like Robo's strategy, for instance, like Andrew Kang pivoted away from crypto and started doing robotics deals. So far, I think been quite successful. He understands capital markets. He did the whole kind of like, I mean, I'm not here to advocate like you're rolling your eyes. I get it, but like I hear your point. Like, why is a crypto investor doing a robotics deal?
Time will tell They are successful, by the way.
No, no,
Yeah.
no, 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 no. Like,
He's
I'm
been
not here
very
to advocate.
successful at making sure that he accrues value. Now, what happens with the investments of the things underneath? We have time. It's going to take a lot of time.
Yeah.
So
putting aside the robo strategy structure, he was, in his defense, early in some of these robotics deals that, at least on paper, are worth much more than we like.
Yeah, put in a huge check into Figure, double down again.
I think
yeah.
my point on that is, I think, how do you reinvent yourself as a firm? I think you have to do one really good deal, like that really puts yourself as like, holy shit, these guys were super early here, like, and then you just juice that to just build a brand, build a reputation. I think you've seen that in AI too. Like, there's been some firms that I had no idea who they were, and they just did, like, were early in Anthropic or early in OpenAI, and like just kind of built a name for themselves, and then use that and parlay that into getting another deal. And maybe that's like this. You guys have done some AI deals recently. Like, do you see a world where you're hugely successful in some of your AI deals, and then you just say, "Oh, fuck it! Like, we're just going to go do more AI deals that may or may not have a crypto strategy to
So
or
I think
angle
there's
to that."
another thing that people are misunderstanding a little bit about some of these deals, and this is happening in AI too, right? Which is also like venture math. And so, like, the reason people didn't do hardware before is because these things had to raise a bunch of money, and like the valuation could go way up, and you could also not make that much
Dilution.
money, right? Yeah, and there was a chart that was going somewhat viral on Twitter earlier this week that I think it was about Anthropic, but it was like, oh, if you put
The dilution. Yeah.
yeah, the dilution, right? And then obviously, like, it's still been incredible because they've had such incredible growth. But it was basically like if you got $500,000 worth of options 3 years ago, it's now worth like 25 million or $20 million, I
Yeah.
think. Um, but and so, like, that's incredible growth, right? Like, you've had 40x growth, but the valuation in that time is up like 1,000x, right? And so for Anthropic, that it's totally fine. Like, it makes complete sense. Um, Now all of the other hardware companies that are raising like their venture companies, like the vast majority of them will not be fine. And even if you're in a situation where you are like, you exit and like it's a good company over time, many of those investors who are like investing in these rounds at multi-billion-dollar valuations are actually probably going to, like, they may not make any money, they may lose money, like, depending on the outside. And I will tell you, I want to make one point here. I've been talking to, I was traveling last week. I was in a hotel when we chatted because I was talking to a bunch of our LPs, and I was talking to some LPs the week before. And, we share LPs with a lot of different people. And, then we talk to new prospective LPs or in a lot of different people. And this trend of, really expanding the mandate beyond, the things that, the things that we are kind of like just within our strike zone or a little bit tertiary. We have started to hear pushback from the LPs and complaints about other funds about them. Right now, the reality is, like, no GP should be investing based on what the LPs say. Like, we should theoretically be the subject matter experts, but and if you're successful, it won't matter because, like, the GP. But if you're not successful, you won't raise another fund, right? And so that is the risk that people are taking who are funds. Andrew King's a little bit of a different story because it's all prop capital, so it's not fund capital. But if you're a fund manager, like, that's something you have to worry about. And we've even had I even had one discussion with a really good LP of ours, really big brand name. We love them, who has even asked us the question at times of like, well, if you're doing the same investment with this other person who is a really great name, like, looks like a great deal, but should I just be putting more money into them because I'm into this like big traditional generalist, and instead of you guys? And that is the question people ask, and you have to be able to answer that appropriately.
Yeah, I think I have a pretty firm belief here that you earn the right to be a generalist. I think if you are everything for everybody, you are nothing to nobody. And it's important, like, you guys mentioned Sequoia. Sequoia started as a niche firm, right? They had a thematic focus on technology and electronics. Don Valentine was Fairchild and National Semiconductor. They were the smartest in the room when it came to semiconductors and chips, and they earned the right to go generalist over many years of having success. And Rob, not to
I don't think they went generalist to like the 8th fund, right?
Exactly. They you earn the right. And I like what you guys are doing at Dragonfly because, I mean, you did extremely well in crypto. You were a let's call it top 3 fund in crypto. You earned the right to go do payments and other stuff. And from the early look of it, it seems like you're you're successful with payments right now, and you're earning the right to go do more things. What I really don't like is when funds and companies too say there's other shiny objects over here. Let me just go try to chase those things. Now I'm a generalist firm. That's a real recipe to end up, jack of all trades, master of none. And I also think there's a brand element here, right? You have two customers in venture. You have your LPs, but you also have the founders. Like if I see a fund, you have to think about the brand to the founders and do they want you on the cap table too? And the signaling is spot on. Like Rob, I know exactly the deals you're talking about with these robotics and crypto funds. Like to me, that's anti-signal. To me, I'm like all these other
it's an adverse selection problem. It's like if you're
all
seeing it, it's because like all the real robotics guys passed on it.
Exactly.
But,
however, like Kang, like I I don't know him super well. He seems like he did very well in crypto and is now doing well in robotics. Time will tell. Like Figure is not a good company, then he's not going to do well in robotics because he's extremely levered to Figure. But I do like that he has picked another niche. Like what I wouldn't like is if he's like, I'm doing robotics and I'm doing this and this and this. Like, yeah, you got to pick a niche and own the niche.
Right.
And then I feel pretty strongly about that.
Yeah, that's really good. Yeah,
and I don't think this is meant for us to single him out. Like obviously it's just micro.
He's actually going to come on Empire soon, so we'll have a long chat with him.
Yeah. And Robo Strategy obviously was kind of somewhat early to this, but it's obviously just top of people's mind. But I think it's endemic to your point across the industry, and so like it's something that I think a lot of people are trying to figure out right now. And I like the point, Yano, that you made, which is that like you picking another niche, I think is important because you have to become an expert on these things, or at least an expert enough, right? You have to become dangerous enough. And I think Yano or Santi, maybe you made the point earlier about, well, how much of Sequoia today is the brand versus the investors? Well, it's a little bit of both because they can hire the best people because of the brand, and they can help King make companies that because of the brand. And so these, I think Mickey Malko was on David Senra's podcast.
Yeah. You stole my comment of the week.
Yeah, sorry. But one of the things he said that I really liked, I was listening to this morning when I was at the gym, was that the only thing that you really have that compounds value over time is, yes, money compounds value, but your brand and your reputation is the real thing that compounds value, and everything else is downstream from that. And I loved that statement by him, and I think that's exactly true in all of these funds.
Yeah. Before we go into the news, I want to get your guys' take on something I've been thinking a lot about, which is like the opportunity set in crypto. And by the way, you hear this, like the 21 vintages and after that were terrible for venture, and like not just in crypto, but like you said something earlier, Rob, that reminded me about just what I've seen, because I've been an investor in many crypto funds, and I can tell you the returns of, for most of them, as is in venture, has been like pre 2021, it was factor. Like if you do the attribution, it was like crypto went from being like $1 billion business industry to like 2017 it was like a couple billion, and then it just ballooned to a couple trillion. Like how much of that's like just you're tracking the Bitcoin and the growth of the industry. And I feel like now you're seeing anyone that's made money after 21 has really earned it. Like really earned it, because it's incredibly hard to make money. I just think more of a question of crypto, like what is the investable universe? Because like after 21, there's been only very few pockets that have, if you weren't in these names, you not only like underperformed, but you just lost money. And so I'm curious, like how you think about the investable universe. We talked like last episode about fund sizes. Is there too much capital in the system chasing fewer deals? I know larger deals are getting done, like Kalshi and Polymarket, but then you're also competing against other firms that are not just historically been crypto. And then the second question is like, maybe I'll just pause there. Like, how do you think about the investable opportunity in crypto? And are you, the second follow-up to that was like, are you getting pushback from LPs around that? It's like, hey, maybe you should be raising as much of like this fund size.
Yeah, so I mean, we're not we announced the fourth fund earlier this year, so we're not like out in market, like actively having these discussions about a new fund size. So we haven't heard that yet, but still obviously an active dialogue with all the LPs, and there is obviously just a lot of interest in AI, and like it's kind of sucking up all of the interest at the moment. I was actually to the point earlier too about kind of generalists versus non-generalists. One of the thing that I was talking to like a venture recruiter, because we're hiring for a few roles right now, and one of these guys was telling me, he was saying all of the interest across all of the valley is for people with deep tech expertise, and who, because like all of the firms are trying to hire people who actually know deep tech, and so we're seeing this on the fund side as well. I think, listen, on the really specific question about the investable universe in crypto, I think that what is happening is that tokenized assets and stable coins, and just all of finance is being put on chain. And if all of finance is being put on chain and it's in the water supply, that means that everything that produces and distributes water, all of the applications are going to touch crypto. And so, in one sense, that's a very wide mandate, because like that's all of finance globally, and that's an incredibly big addressable market. But in some sense, it is finance, and it is some of these AI things we're talking about, that finance includes DeFi, it includes payments, it includes centralized finance, it includes perpetuals, the future of markets, et cetera. But it doesn't necessarily have all of those other categories that we used to talk about before, which is NFTs and consumer and social. And I think somebody put out a tweet like a few weeks ago that was like, oh, everything that didn't work in crypto before will eventually come back and work, which was like the most nonsense tweet, because like we've learned something since then, and we've learned that maybe that wasn't the right those weren't the right things for this modality, this piece of technology, and that's fine, and that's okay. We should learn from the past. But I think I would even make the more specific point to you, Santi, which is around, okay, well, everybody it's been hard to earn money since 2021. And I think there was the new Carta data came out earlier this week, and what's going on everywhere on Twitter. And if you look at it, the 2022 vintage of funds, the 90th percentile, this is all venture, not crypto specific, the 90th percentile 2022 vintage is a 1.68% times X TVPI, and a 12% distributed capital back to those. And what I could tell you is that it shows you that regular venture is very hard, and so making money in this space was actually much easier before. It is now just looks more like regular venture, which is also why the deals look more like regular venture, and also why people are trying to figure out how to change the way that they go and invest in the future. And I was actually surprised by how bad some of those returns were on the regular side, because I'm here in crypto and I'm like, oh, like we've got the returns that are better than that, and we and we're like, oh, well, it's not as good as the 2018 vintage, right? But I think it's just that any space, any capital market that is accruing a lot of value, that where people are able to make money, it gets more efficient over time, and that's just where we are today.
Long gone are the days of 10x in 2 years. Shit, man.
I think so.
Should we pack up our bags and just punt the NASDAQ and call it a day?
Listen, if you could just go 4x lever long Micron, you can take 10 million, 5 billion. So, No
doubt. that is, ladies and gentlemen, is a dig at situational awareness. We are aware of the situation. So is Ken Griffin. Not to get too much into that.
Let's get into some of the news of the week. Robots and machines will outnumber humans on chain, and Peaq is how they get there. peaqOS enables any machine to do business on any chain. It turns machines into autonomous actors and liquid assets with ease, giving robots access to capital and the ability to compound their value. That means funds, allocators, and institutions can underwrite, finance, trade, and route capital to machines the same way they handle any other asset. Millions of new potential consumers for any Web3 service, from compute to storage to anything a machine may need, without a human in the loop. Head to peaq.xyz or click the link in the show notes to find out more. So first one, I don't know if you guys saw this, it was Cloudflare wallets. So I'm going to share my screen. I actually went and claimed my Cloudflare username, which is not something I thought I would ever do. So basically, Cloudflare announced Cloudflare wallets. It is a programmable wallet system, quote unquote. A lot of this is just reading from their blog, designed for the agentic internet. Basically, how it works is, so the human controls the account wallet, which is like, your fund storage, the on and off ramps, policy setting. And then from your account wallet, you can actually spawn these virtual wallets that are agents, that your agent controls via API keys. And each virtual wallet comes with a guardrail, which is like, spending allowance and allow lists and maximum transaction sizes and overall caps. So imagine, Santi, you go create your wallet, and then you have a virtual wallet for buying software on the internet, like buying API keys or something like that. Then you have another wallet for trading, which is plugged into Coinbase and Robinhood. And then you have another wallet, which is mainly for reading news articles and consuming news or something like that. So, yeah, pretty interesting.
Is this cookies are dead? This is like the new cookie. You have a wallet, Jason. Everyone knows what you're spending money on, and like marketers love this.
I think it's not just the I mean, the cookie is dead has been something for many years that people are saying. I think it's another data point that people can use to target people. So you can use credit card data. You can use obviously your browser history. I think there's a lot of really rich data in wallets. And it's actually something that Blockworks is looking into at the moment to see there's so much rich data on chain that is really not being used right now.
If you can stitch it, but I mean, like for sure, right? If you're a marketer, like crypto's always been like pristine data.
Yeah, exactly. So, and look, it's cool because I mean, the relevant thing and why we're talking about this on Empire is each wallet stores and spends using stablecoins. There's these, claimable human readable handles, but then everything else is agents. It also integrates the X402 protocol so that micropayments can actually be attached directly to a web browser, like an HTTP request, right? So if you want to pay for an API or an MCP tool or content or AI inference, that's all just done with stablecoins over the X402 protocol. It's pretty interesting. You can go play around right now. I went and set up my handle.
On this handle stuff and agentic, just a moment of that, because I know you're so plugged in and you love Robinhood. Have you been poking around with like their whole agentic capabilities and like instructing agents to buy on your behalf? And
I haven't. You know who I saw posting a lot about this was Tom Shaughnessy.
Tommy,
I want to bring maybe Tommy on and have a conversation about that.
Yeah.
So, any thoughts? Bullish, bearish? This Cloudflare announcement?
No, bullish.
I mean, can't be bearish.
Yeah, I mean, it's bullish is general. I think like the future of just like economic activity. There's 25% of the internet runs through Cloudflare, and they've been releasing this data that I think we're all up to like between 55 and 60% of like all internet activity are bots now today, right? And so there's it's very clear that the world is going this direction. I think there's nobody you can talk to today that doesn't think that agents won't play a real role in transactions in the future. Now, what modality that is and how and who and like all of that, like that's still very much up for debate. I think this is very cool. I mean, Cloudflare, I know the guys who are on the team who are in charge of this stuff, and they've been working on this for a long time, and they've been thinking a lot about, do we need our own stable coin? Do we use other stable coins? And they eventually decided that they're going to use kind of be stablecoin agnostic. They've been talking about, okay, well, what blockchain should we use? They eventually decided they're going to be mostly agnostic there too. They're just going to support a lot of the big ones, and their perspective is just has been that agents are going to do many different things. The right way to transact, the best path to transact will be different for every agent for a lot of different uses. And they want to just be at the center of owning the identity and the authorization layer. And I think that's actually where a lot of the value is going to accrue, because we're never going to be in a world, I know people like to be in this like sci-fi area where like, oh, like all of this economic activity is going to happen from like agents that are doing whatever they want and like aren't going to be owned by a human. I don't actually think that's true. I think it'll have to be owned by a human, and you're going to have these delegated agents and controls in place. But there will be a lot of value in who the people are that help you control and manage those agents, and that's actually part of the thesis of the Sapient investment that we did. And so, I think stablecoins are going to play a big role here, and not going to be the only thing people transact in or agents transact in, but it's going to be a part of that. And so, excited to see this.
Two observations here. Will, actually, I love seeing people that have former founders get like Will, founder of Syndicate, Smart guy. I think I met him. I ended up investing, but I really liked him. Now I wasn't aware that he was at Cloudflare, which is crazy. We're going to talk about that
I think
later.
they like acqui-hired the team.
They acquired the team. Interesting. Yeah, good for him. One where was I going with this? I'm curious. Like we talk about programmable money as like uniquely enabled by stablecoins, right? But like you can have like a wall, like you could have credit cards, like. Is there a version here which is actually bearish? Like your point, Rob. Like, do you believe in a world where like agents just traffic on stablecoins? I feel like a lot of the narrative has been agents. You need stablecoins to transact because A, they're not human, so you can't open a bank account, and B, 24/7, 365. Is there an argument to be made here along the lines of like Colin Bank, who says like, no, wait a minute, like we can do this in TradFi. We can just set up like specific credit cards or like debit accounts that are specific for the agent, and like you have rules and customizations in place, and like you don't need a stablecoin. Like this can work with the current rails. I'm just trying to play like the bear case here for.
I mean, you can do a lot of this agentic workflows in like tokenized single-use virtual cards, and so it's
For anyone not familiar, Rob, that means not crypto.
yeah, it's like when people think about their credit card, they think about like, oh, this like thing I have in my wallet that I pull out, or maybe it's an Apple Pay or whatever. But people don't realize this. But in a lot of payments gateways now, depending on the type of business, but OTAs specifically. So if you think about if people don't know what OTAs are, but if you think about like Booking.com, all right, which is an OTA, every single transaction that goes through Booking.com is actually a single use virtual card. So they give you a net new number, and it's specifically allowed to do this transaction at this price, right? And so you think you're putting in your credit card, but it's actually funding a net new credit card, and that's the way the infrastructure works there. And so a lot of transactions, and Visa's been working on this on tokenized credentials and tokens for not tokens as crypto tokens and not tokens as compute tokens, but tokens for payments to do these things. And so there, I think where we've come out, and there was all this conversation earlier, and Jeremy Allaire I think dropped something this week too about how stable coins are the age of are here for the age of agents. I think where people have come out who are like broadly looking at the space is like there are types of payments where stablecoins make the most sense to do direct peer-to-peer stablecoin payments, and there are types of payments where they won't. And this is a personal opinion. I wouldn't say this is a thing that's necessarily broadly believed, but I believe that the traditional credit card industry in and of itself is going to stablecoin settlement over time. And I think Visa has shown that they're investing heavily in this. Obviously, that's been part of our thesis in investing so heavily in Rain and some others, Velocity, which we announced recently, because I think that from a settlement perspective, it's way, way better. And I also think, by the way, for your point, Santi, where like Column is like, oh, well, we can do all of these things. That might be true for a lot of things domestically, but we're also hearing now from some of these banks that they want to be able to do tokenized deposits for intra-bank settlement. So it's still it's still maybe not a stable coin, but like, oh, they understand that to get better settlement, to run 365 and to not have so much credit in the system, there has to be some sort of tokenized asset there in the middle. And I do think that is where the world's going, whether you call it a stable coin or not.
A lot of I know we got to go to other news, and speaking of Rain, the Western Union stuff, of course. But on this point, like for people that are coming out, I think I feel like a lot of the criticism is, wait a minute, what about chargebacks? What about like if it's an immutable transaction? Like how do you figure all that logic, which is not simple? Has there been like, is there a clear, easy solution to all this stuff that maybe the folks at Visa and others have like engineered around stablecoins and like escrow or something to allow for this? Because chargebacks are a big component of like online transactions and whatnot, or just regular transactions.
Yeah, I mean, I think the reason that Cloudflare has set it up the way they've set it up, which is like, oh, well, you have to on-ramp as a person, and then the person can on-ramp the money, and then you can set up the agent in the way that you want to set it up, and you can give it parameters, is done to try to protect themselves in so much as like, if you need to have a chargeback and the agent misspends $100 or whatever, like it's you've taken on that risk. Because today in the peer-to-peer transaction side of stablecoins, that doesn't exist. Now that's been solved. It's been kind of dirty solved in a couple of ways, which is, okay, well, a lot of these companies who actually do stablecoin settlement, they actually just batch settle. And so we think that stablecoin transfers are, atomically settled. And that is true if I take, my non-custodial wallet and send it to your address, Santi. But like if I'm a payments company who is using one of these service providers, Bridge or whoever else, they're actually batch settling. And so like if there's a complaint, you have, some amount of hours before that batch settlement. And you also have a counterparty that you can go talk to. The other thing that is happening is Circle did actually launch like an escrow payment protocol for chargebacks, and there's a few other people trying to do this. They haven't really taken off yet. This is again why I think, and this is also why you pay for a lot of things that you pay for when you pay for credit cards and etc. But it's again why I think that there will probably be a situation in the future where I mean, their payments for agents will be done in a bunch of different modalities depending on size and quantum, and if it's in a closed loop system, an open loop system, is it, e-commerce, is it enterprise, et cetera. Cards are going to play a really big role in that. And stablecoins will play a really big role in that, both as settlement and as peer-to-peer. But the peer-to-peer side does have further to go in some of these trust vectors.
Yeah.
Yeah. Let's talk Circle. Circle announced earnings. They got to fix their IR page.
Are you going to read through all that, sir?
No, but I'll give you the highlights like the good host that I am, Santi. So I would call these earnings mixed results. I think the stock is pretty flat. Total, though, it outperformed, I think, what a lot of crypto native folks expected. I think, I've talked about this before, like don't bet against Circle, don't bet against Jeremy Allaire. I think a lot of people like to, pile on to the bearish Circle takes. And I think those are generally the wrong takes. I think the business is more diversified than people realize. But yeah, some of the highlights, total revenue grew 7% year over year. Company's now doing like 50 million of net profit. Adjusted EBITDA is like 140 million, which is a little bit down quarter over quarter. Core stablecoin metrics started to reverse. So USDC circulation fell from 77 billion to 73 billion. On-chain transaction volume dropped from 21.5 trillion to 15 trillion. I'd say bright spots are the Circle Payments Network. Volume surged about 75%. I think they raised other revenue guidance from about 150 million. They doubled it to 300 million. Though I'm pretty sure that jump I was reading is an accounting recognition of the ARC token presale because cash was pre-collected. And then, the big thing is they have ARC mainnet scheduled for about a month from now, September 16th. So, curious to get your guys' take on ARC or on Circle here.
Well, the stock, just to lay a little bit more color on that, the stock's down like 60% since, more than that. It's down almost 80% in last year.
But they also had that completely absurd IPO.
I'm looking at the candle. It's still. I'm not going off the like Burj Khalifa candle. I'm like looking at like once it's sort of normalized. It was like at like $100, $200. Now it's like 65. So I call it down 70%. If I look at the analyst targets, like some of the analysts came out like to your point, the stock kind of like is down pretty. Like it feels like it's bottomed here at like 57. Who knows? I'm not a chartist. I'm not looking to be one, but a lot of the analysts were. The commentary was similar to what you're saying, which is like I feel like the market got pretty jittery. Like it went down like in May, because people were like questioning the defensibility of the network. Like it's only going to get more competitive with stablecoins. Rob, I don't know if you agree with this, but like I feel like a lot of the worries when what was the open consortium that launched, like the market got pretty spooked by that. Yeah. And so I think now it was interesting to see the analysts say like, hey, I feel like the market's overreacted. They do have defensibility. They have other partners. Like it's not so easy to unseat. But I think that continues to be the bear case with Circle, which is like it's only going to get more competitive from here. And but I do think like if I look at the analyst targets, a lot of them are like in the 100 range. Like some of them revised down. Actually, most of them revised down, which I found interesting. But like stock's sitting at $64. Most of the analyst targets are like at 100. So call it, okay, you have some like, some upside there, like pretty dramatic, like 60% upside if you believe it. But that's still like 32 times EBITDA of 27. That's not cheap. Like I just, I'm curious. on a relative basis, like would you rather be buying this versus Visa, Rob?
I think Visa is an incredible business, and like I'm actually very bullish Visa over time. Listen, I think on Circle they yeah, obviously the market got really spooked after OUSD. I think the stock was down 17% the date that was announced. There was a little bit of a leveling off it, but it hasn't regained all of the loss at that point. There, I think it didn't help OUSD that it came out, like some of the partners were like, actually, we're not really partners. We just were told about this, and then our we didn't know that our logo was going to end up on this thing, and some other stuff that came out after that. And so obviously it made it look a little bit more haphazard than it seemed at first glance. And so I think they benefited from that. Listen, I think for Circle's the only way to directly express bullishness on stablecoins. If you're a normal investor, right? There's people like me, obviously, who are private market investors, and there's certainly call it other ways to prediction markets and things like that. But there is the only way to directly express it is to own Circle stock, and Circle is the leader for all of the use cases people are excited about. So obviously Tether has this incredible business and emerging markets and with retail, but they're certainly not winning the institutional use case, and that is what we're seeing people get really excited about, and also like the agentic use case, and so it makes sense that people are excited. I mean, I think the one thing you didn't say, Yana, when you talked about their earnings, which I think is still the most important thing on their stock, which is that the amount that they are paying for distribution, it keeps going up every quarter. So their net revenue is about 60% less than the revenue that you mentioned, the gross revenue, and they're paying on their reserve income. They're paying about 62% of that away today. That probably continues to grow, and that is probably one of the biggest headwinds to the stock right now from a revenue perspective. And at the same time, the good thing has been that we're, I guess, more constructive about the rate curve at the moment than we've been in a while, because people are about the economy. But those are still the two things that are,
but also the other big thing I missed is that the agreement with Coinbase, which everybody was saying the agreement with Coinbase was about to end, the agreement with Coinbase just got renewed actually, on I think existing terms, which means that USDC remains core and central to all of the Coinbase products. So that was I think that was different than what the market expected. So I'd say that's a big
there was definitely a lot of rumors about what was happening there. And then before OUSD got announced, there's a lot of debate about how involved Coinbase was in the OUSD product as well. But it never really made any sense that Coinbase would want to get rid of that deal in my mind, because they get 50% of the net interest
deal for Coinbase,
and they get 100% of it if it's on Coinbase. So like there was no economic reason for that to ever have happened. So I didn't quite understand that. But yeah, I mean, it's honestly, like, and I said this in the post I made about OUSD, I think it would be much more bearish Circle stock if that had ended.
Yeah,
it's much more bullish Circle stock if that had ended. Like, it would have been way better for them.
Yeah. Okay. Coinbase what's Coinbase trading at? Like 38 or 39 B. Circle is at 16 B. So Coinbase is trading 2.5 times greater than Circle. Which, if you had to put it on the pair trade, what are you both doing?
Is neither an option? Robinhood, dude. Like, I don't own any hood directly. I have some exposure to it in other ways, but I don't like either.
I mean, listen. I'm a stablecoin bull, so I'm going long Circle.
Long Circle, short Coinbase at 38 and 16.
Well, if you asked me, if I'm given the choice that I have to do a pair trade, those are the directions I'm picking. But I wouldn't do that trade.
Well, fellas, what is interesting?
Headline. We're making Let's make the headline: Rob shorts Coinbase. That is
Yano's trying to get me in trouble right now.
Dude, Rob comes in this pod and has like a couple of lines that he needs to hit to be on the headline, and I think he's been pretty good at it.
I'm taking the for what it's worth. I'm taking the long Coinbase. I'm
long Coinbase.
Excusing myself from the pair trade that I gave to you both because I don't want to short. I'm not shorting any crypto companies.
I'm not shorting. By the way, I'm not shorting anything ever. I'm
just not, me too. I'm long. Yeah, long Coinbase. Yeah. I disagree with Santi here.
If you want to hear, there's great post-mortem on situational awareness. I guess a lot of it is pair trade related. So like, I feel like you're gonna continue to hear that. One interesting thing on this point, I asked you earlier about Visa versus Circle. What's interesting is at the current level of where the stocks are trading on a forward basis, they're about the same, 20 to 22 times forward EBITDA, which is interesting, right? Like the market just kind of brought Circle down to gravity. And the analyst targets are expressing that Circle's multiple expands from here, which I don't love that. So for that reason, I just think the stock is rightly priced at the moment. And I see a bit more downside than upside, candidly, because there's, I don't know, for the same reason that like crypto names are just more reflexive, and Visa, I still think Visa is going to continue to, Kai and team are just very cracked, and they're going to continue to make a push into this, and they're going to just reinvent themselves. So I feel like it's, but the thing about Coinbase, though, can we just talk about that for a minute? Like, Robinhood, for example, has like 9 or 10 different business lines that are cranking out $100 million each. 13. 13. All right.
But by the way, Coinbase has 12. Coinbase has 12.
Okay. I was going to ask you that.
Coinbase.
Interesting. Okay.
Yeah. Wait, not just doing $100 million of revenue, which was what Santi said.
Yeah. That's.
Let me look it up. Let me do a quick fact check of myself. Hold on.
Yeah, I think you're giving the total business.
I would be shocked, dude. Talk about like integrations, right? You're going through it right now. I'm sorry. I mean, Coinbase, the product is not at the level.
No. Coinbase, we're growing new revenue streams. We have 12 product lines, each generating over 100 million annualized.
Okay. All right.
Okay. All right.
Good for them. I mean, I think the
we'll learn something.
There's like a business point. So like Santi's like, making a very good financial stock point on the multiples. There's also like a business point, which is if I think about like competitors today, like who are Circle's competitors today? Like what kind of scale and size do they have? Like how far along are they? Like the thing that is probably most competitive to Circle today is like, the OUSD consortium, and then this trend of, we'll talk about Western Union later, but like people like Western Union launching their own stablecoin and their white label stablecoin. That's like their competition. And then the competition for Coinbase is like every exchange in the world and Robinhood, and because they're trying to be the everything exchange. And it does strike me that just, it's a little bit more of a knife fight on that side of the market. And they're also the things they are doing are so much more varied and like require a lot more expertise across a bunch of different areas than what Circle's trying to do.
Rob, you want to hear something funny? Speaking of Western Union, you might actually win the bet. The stock is down quite a bit. We're going to settle in November. I actually feel bearish after doing all this work on remittances, as you guys know. But to your point around the stablecoin, because I came into that like registered DAS CEO talks about working capital and pre-funding and all this stuff. I did a lot of work just talking to people in crypto that are building distribution networks, like boots on the ground kind of stuff. Folks like Yellow Car and stuff like that, really understanding like where is the demand for stablecoins, because that the premise of Western Union launching, we should talk about Rain, right? Like, is know your clientele. I don't think that a lot of people in the Western Union like customer base want this, because by the way, they've had a debit card before and kind of no one really used it because people prefer cash. But in my I just kind of went to pockets like in places in Africa and Latin America. A, people love cash. B, people love Tether. Like people love USDT. So that's the other thing that we haven't talked about here. Like Circle and any other person that is going to compete against Circle, like USDT for retail and for ex-US is king. You have to then believe like how big is the addressable market today and how quickly does it materialize? Because maybe clarity doesn't pass and the odds are pretty bleak there. And I feel like in a perfect world, like you're competing. Like the biggest opportunity for stablecoins continues to be outside the US, continues to be retail, and Tether is capturing the lion's share of that. And I feel like that my point is that TAM is not as big, I think, as people want it to believe in the next 2 to 3 to 4 years. I can't look farther out than that, to be honest, because
Yeah,
I need to make a decision whether to buy the stock.
I disagree with you generally because of the point I made earlier about like settlement infrastructure. And so again, I just have this perspective that like I think when you talk to the networks and I think when you talk to a lot of the correspondent banks, like it feels very clear to me that like we're going to tokenize asset settlement. Now that's like very unsexy and like people don't like, love to talk about that in the same way like a peer-to-peer transaction. I think you make the good point though on the Western Union side. I mean, what Western Union's got, they do about 110 billion of like cross-border transfer volume right now on a principal basis. That's on like 50 million yearly active customers every year. To your point, like they've tried some debit cards and stuff in the past, but it's been hard for them to launch globally, and it's been hard for them to, kind of roll out in a concentrated way that also incentivize people to stay in the platform versus outside of the platform. But it's also just taken time for them to really expand that infrastructure and build out some of that infrastructure. What changes here is that people don't really need to know that it's USDPT. Is that what it is? Yeah, USDPT.
USDPT.
Yeah. Because what's happening is like it's going to be the on ramp is mostly going to be the same thing today. Now, you can also send a stable coin or you have to send USDPT or there'll be swaps for that. And you can like, just be a customer of the app today. But like that's not really what they're focused on today. What they're focused on is the fact that they have these, 50 million actives and who send, 200 to 300 million transactions a year from, places like the US, places like Europe to emerging markets. And right now they charge those people, and the person in that emerging market, goes to the agent location and they get cash, right? But now they don't have to go to the agent location to get cash if they don't want to. They can get it in their application. They can get revenue share or whatever rewards for owning the stablecoin in the case of some reward backs, and then they can also get rewards in the course of using the rain card relative to what they were able to do before. Now, in some areas of the world, like they'll prefer cash, and but in a lot of those areas of the world, they might prefer cash for their spending. But what they will like is that they can hold a US dollar in a form factor and from a location or a company that they trust and can now spend it online without FX fees. They can spend it in any type of location. And now for Western Union, that means they can go and they can monetize those users in a way that they couldn't before. So that is the story. I mean, they're also talking about like treasury management, stuff like that for saving costs. But that is the bull case for Western Union, even though I might, win that bet.
Yeah, no, I think to round this out, I think you're absolutely right. I think that is the bull case. We just didn't feel comfortable proving that out. I'd rather have Western Union prove that out in the public markets. And if that's all well said and done and true, great. I talked to one of the most notable like crypto companies like working with kind of Western Union, their network. And he said like, you kind of only want to buy Western Union because you're buying trust. And any other smaller player is kind of like a shittier business model with the same regulatory footprint and requirements, but Western Union has a lot of trust. Hopefully they can pull it off.
Much recognizable brands in the world in money and remittance. I just gave you a little bit of the data. They did, 4 billion of revenue last year. And so like, I think it's 375,000 active agents now globally. Like they have a network. We talk about networks all the time. They have a network. So to see them doing this with Rain, it's exciting. So.
Yeah. Can you talk a little bit about the Rain stuff? Like just, I know you guys are investors there, but how does Rain make money here?
Yeah. So Rain is actually providing like the entire stack for them. So they're working with Rain on on-ramp off-ramp. They're working with Rain on the card issuance side. They're working with Rain partners on the wallet side. And so I won't each one of these deals are independently negotiated, so I won't talk about it specifically. But the way these usually work is that when they provide all of this infrastructure, there's some sort of, call it platform fee or min fee or something like that. And then they also get fees on both, like, potentially the amount of users and also then a percentage of transaction volume. And so, like, for like a Rain, who is sort of uniquely able to do this product because they can go globally. I mean, I think they're on day one or yesterday they launched in 37 markets. I think they'll be in 60 markets by end of year. I think Western Union is in 200 markets in total, and so they're working towards all 200 of those, and in the next 18 months. And the ability to do and operate compliantly, legally in all of those different markets, to do so in US dollars and also in potentially multi-currency, and potentially use BIN numbers, which for people who know what a BIN is the bank identification number, which is required for each individual card that can be used also through the US or through in other countries. Like it is a actual, like, it's a thing that has only been able to happen over the last few years. And it's a huge technological feat. And the ability to do that and open up all of these different new geographies is basically a brand new thing that's happened over the last couple of years. And that's why you see people like Western Union now so excited about it, because it would have been an absolute compliant and legal and infrastructure nightmare a few years ago. And Rain and now a few others who are trying to do the Stripe is trying to do it, is uniquely able to allow people to open up all of these different corridors with these products.
All right.
I'm an investor, so bullish.
I asked Santi before you joined, I said, Rob, what do you want to talk about today? He goes, I don't know. There's a Kalshi thing, which was like the Kalshi lawsuit, and Rain. I was like, oh, you don't say, Rob. Yeah. I respect it, Rob. You're out here hustling. You're out here hustling.
Look,
there was we announced this deal into Velocity, and this kind of payments company that's doing this acquiring stuff, and the founder went on Twitter or went on one of these podcasts and called me his CMO, and so I'm saying
high
CMO
praise.
For hire.
High praise.
When was the last time Rob's talked about a version out here, ladies and gentlemen? He's gonna flip it back. He's like, well, do newsworthy stuff,
I almost said something like that, but I wanted to let you do it.
Yeah, before we do content of the week, Santi, I have a watch you should buy.
Okay. Oh, the Saddam Hussein Patek Calatrava.
How'd you?
Did it? Did I not read your fucking mind? Oh, there you go.
Look at how incredible. There's a so for folks who are not watching on YouTube, there's a Patek Philippe Saddam Hussein collab. So it turns out in the 80s.
It's an ellipse, not a Calatrava. My bad.
Yeah,
it's a beautiful watch. I mean, ellipse is if you want to get in the watch game, I really dislike this idea that you have to buy and spend a ton of money. You can find beautiful vintage watches. This included, obviously, put aside the Saddam Hussein attachment, but ellipse is a fantastic watch in my opinion.
So from the late 70s through the 1980s, when Saddam Hussein was leading, leading Iraq, they were a huge corporate client, it turns out, of Patek Philippe. So Patek would give these watches. They were never actually sold to the public. They were actually given as kind of political currency to the Iraqi high-ranking military members, and the big, the bureaucrats and the diplomats and VIP visitors to the presidential palace would, Iraq, Hussein would be able to give out, these watches to the VIP visitors. So yeah, there's actually it's an amazing website, Loop This. It's like a new watch auction website.
Oh, really?
But anyways, they've got one for sale. So I thought of you.
So this was not owned by Saddam. It was probably some dignitary or something was hosted by Saddam, and then they got it. Yeah.
So I bid. I have quickly been outbid. It is now the current bid.
26K. Did you actually?
I bid.
Oh yeah. Ladies and gentlemen, Yano's printing.
I bid at the very beginning when it was not 26,000.
That's right.
Yeah, after we get off, you're gonna put in another bid.
I'm tapped out. Can't be doing 26K in a bear market for.
That's not founder build.
For a Saddam Hussein Patek Philippe watch. Yeah.
It's like, sir, welcome to the United States. What do you have there on your wrist? Like, well, actually, officer.
He's not going to be allowed back in. So like he's gonna
dude, at least allow me to go back to the America, and I want to record some in-person pods, guys. I can't be flexing around to Saddam lips.
Can't be doing that. All right, content of the week, folks. What do we got?
You said it. Rob stole it from me. Mickey Ribbit, founder, phenomenal investor. I think one of the best investors. Founders podcast, worth a listen. I won't say more than that.
Did they talk about his art collection?
Yeah, they talk about NFTs. They talk about his art collection and the idea behind it. Yeah. I haven't finished it. I'm like 3/4 of the way there, but really good stuff.
Yeah, he talks a little bit about they did this like digital art. Him and his wife funded this like digital art gallery. And they talked a little bit about people. He talked a lot about crypto, actually.
They're very long crypto. Like they were seed investors in Morpho, and they're huge crypto investors.
I think they were late investors in Morpho. They were like the but they were early like Coinbase. Like they've been around for a long time. He's done an incredible job. So
well, he built a company with Wences Casares, who is obviously a Bitcoin OG.
Yeah. He's done an incredible job. He really, to your point, Santi, talked a lot about like, people ask me if I'm a seed investor, and I say yes. They ask me if I'm a late stage investor, I say yes. They ask me if I'm a fintech investor, I say yes. They ask me if I'm a nuclear investor, I say yes. And his point was like, I'm an investor, and like, I figure out how to do all these things. So he really backed up your point earlier.
Well, that's and I think that's really that you said earlier, reputation compounds, and I feel like he had a total outpour of founders that retweeted David's post around Mickey Ribbit guys, like fucking the guys just going to battle with you. They're amazing to work with, and they really listen. It's actually pretty impressive to see. Amazing. We should have him on the pod if he wants to come on. He's Venezuelan.
Yeah, I can only hope that someday, like, people talk about me the way they talk about him. And I love the stuff that he said about brand and compounding and and I think the thing about him too is he opens his doors to everybody, and he's just an incredibly nice person as well. And so like there's not really bad things you can say about him.
No doubt.
Rob, content of the week.
Gosh, I don't know how I follow that up. Yeah, I will say I was gonna give
movie.
like what you say?
So pick your random fucking Rotten Tomato horror movie. I have now a Rob content of the week predictor, man. I have like 3 theories here. I'm gonna start a prediction.
No new horror movies this week. I'm seeing there's a new movie I'm seeing this week, but I won't pick it. I will. Gavin Baker was back on Invest Like the Best, talking about a lot of the AI jitteriness in the market, and think it was very timely. Following what happened with
he was like, I can't explain what's going on. Fundamentals are getting better, and I think he didn't know. Like, but it was like 2 days before situational awareness blew up.
It was 2 days before it. It was like, it's terrible. Yeah, and so it was very interesting to listen to it after what happened and like the context of the two of them together, because he's he's
Rob. We need that kind of energy from you, because I'm gonna be bearish. People know that, no surprise. Any opportunity I can. Yano is sort of like in the middle. He needs to be neutral. You are the guy that needs to be the Gavin Baker of crypto. It's like the market is wrong. Like Solana back to 10,000, Ethereum to 50,000. Like
we do need that. We got a dream.
We need that. Tom Lee sort of expended all his cash, man. Like we need a new figure needs to arise. And needs to be ultimately.
Rob, it could be you, dude. It could be you.
It could be you.
We went from.
Know me long enough to know that is not my general demeanor about anything.
Do Kwon to Michael Saylor to Rob Haddock.
Oh, God.
Rob, Rob, I'm telling you, man, you are under no obligation to be the person you were 2 minutes ago. It could be you. I'm just gonna leave it at that.
So Rob, you could be this guy, and Santi can be the Tony Robbins. That helps you. That helps you get there.
Rob, I charge advisory fees.
All right. Speaking of bullish announcement, I have a content. Here's my content of the week. You guys know what you're looking at here? Do you? All right.
Saddam Hussein.
All right. Saddam Hussein. No. Okay. This is content of the week. Way bigger than Milky Malka's podcast on David Senra. Okay, so for the last for basically forever, archaeologists believe that the Amazon could only support these tiny little communities because their soil was too bad for big complex civilizations. So then we basically started ripping all the trees out of the Amazon, deforestation, and they started exposing these big circles and squares that were carved into the ground. What we basically just did a bunch of LiDAR. So they just used all this advanced LiDAR laser technology and found a huge pre-Columbian network of cities, which essentially rewrites our understanding of South America. They basically flew LiDAR over 4,500 kilometers, and they basically were able to like digitally, remove all the trees and see what's underneath. And they found 396 unknown earthworks, which were surrounded by 15-foot deep connected roads through all these different cities. And anyways, it basically completely rewrites history.
Dude, aliens are real, I'm telling you. Like, you go in this rabbit hole, no one can explain why you built the pyramids in Egypt, like the engineering marvel of like the precision of laser cut stones and the Mayas. And is this validating? This looks like alien structures, man.
This looks like old civilizations. I'm reading this on science.org.
I mean, this could just be. This doesn't look
old but sophisticated
civilizations that we've done. So,
I think
as a Mexican, Rob, I'm here to tell that looks very sophisticated, though. I wouldn't put it past the conspiracy theorists to say that this is like fucking alien civilization. All right. Well, the next Blockworks event is going to be a cruise on the Amazon.
I honestly have no clue what to say when Santi goes, as a Mexican,
as a fellow Mexican, I'm gonna raise my card here. When are we gonna have a Blockworks event out in the jungle, man?
Oh, I was supposed to promote DAS London and DAS Asia. Totally forgot about that. We have DAS Asia. Thank you, Santi. DAS Asia coming up in Singapore around Token 2049. We partnered with the Token folks. So we're doing it with Token October 7th, I think it is, in Singapore. DAS London, mid-November. Be there.
Guys, go buy your tickets so Yano can out.
We're back in the season, baby. Rob, you haven't experienced Empire in a DAS season, but you guys are my marketers. You guys have to be promoting. I'll give you a code.
We did Empire during DAS in the spring.
Yeah, but DAS New York is a ripper. DAS New York is like sells it. You got to kind of push. This is our first time doing DAS Asia. We're gonna have to push this thing a little bit.
Well, you can listen to Santi and I talk. We can do a live pod. So if that's something.
We do have Jeff from Hyperliquid is coming. He just confirmed. Oh, wow. So that'll be we should do a pod on site with Jeff.
No doubt. Yeah. We'd love to. Then I'll just leave it at this, ladies and gentlemen. Thanks for listening. But can you just point to us the engagement figures if people are listening more when it's just Rob, myself, or the three of us? Yeah, would love to hear that data.
I think we are a great team, the three of us. I think we need all three of us. That's
that was my conclusion. But take comfort.
I think as I started off the pod last week, I said the inmates are running the asylum. I think we need you to keep us, on the straight. He's a great host.
Yano's looking at me like you've just betrayed me, man. Like
Santi hasn't had a mic. Santi hasn't had a mic in like 3 months.
You're bidding for a Saddam Hussein Patek. I don't even have a mic. Sign of the times, ladies and gentlemen.
All right, folks. Enjoy the Friday. Enjoy the weekend. We will. We have an episode with Paul from Morpho coming out next week. Enjoy. Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed.